Hello and welcome everybody, I'm Stephen and I'm a popular investor on the eToro platform. As usual guys, if you could please like this video and subscribe to my channel, that would be awesome. So today's video, we are going to be talking about what happened generally overall in August, and we're also going to be talking about what happened this week as well. I've decided to combine these videos because we are right at the end of the month, albeit a day or two early. So to wrap up really what happened this week, let's talk a little bit more about our results overall. And again, a very good week for our portfolio overall. So we made about 2.9% gains last week, which is really great. That means that we've grown over 9.3% for the month of August, which is a really great result. And overall for 2021 year to date, we are up over 127%. So this is really great, but most importantly, we are starting to build up some really good momentum after a bit of a recovery in July and now a really good blockbuster month for August. If we compare how we performed last week to the overall indices, and this is something that I've been talking about recently in terms of benchmarking, the S&P 500 was up about 1.5% last week. However, the Nasdaq had a really great week at 2.8%. So we finished up slightly higher than both of those indexes. And actually, Bitcoin itself was pretty flat overall for the week. So I think our portfolio performed really well last week. So we had some really good bright spots. And some of those bright spots were some of our technology stocks did really well. Obviously, the Nasdaq had a great week as well. And also some of our value stocks did well. But we had a particular good push last week from China. And as we know, over the last couple of months, there's been, quite a lot of interference from the Chinese government overall, especially in terms of technology stocks. But this has also hurt some of our other Chinese stocks in our portfolio, such as Alibaba, JD.com, 𝗵𝗵𝗀𝗀, which is a casino group, and 𝘎𝙩𝙚𝙦, which is a hot pot restaurant, which is all over China. So this has been, quite affected over the last couple of months, but over the last week or so, we've started to see a really good rally from our Chinese stocks. And this is maybe a good sign that things are starting to turn in China. We also had some good results in other cryptos that we actually own as well. So Cardano had a very strong week last week, which really helped our portfolio. And we've also seen some moves in some other of our cryptocurrencies, such as Binance Coin, which did very well. So overall, we've had good headwinds from many of our different stocks and our cryptos last week, which helped our portfolio perform well overall. Last week, tech stocks performed really well. And we also saw a lot of growth last week for some of the smaller caps and actual indices such as the Russell 2000, which measures some of the smaller cap stocks in the US, actually rallied really hard last week. We also saw a good week for oil stocks as well, because oil actually went up about 10% last week. And this helped really with a lot of our oil stocks in our portfolio, such as Chevron and Canadian Natural Resources. So why did the US stock market do really well last week? Well, one of the main things that actually happened last week was there was an announcement by Pfizer, which said that they actually received FDA approval on Monday last week. This is really good because it actually added some legitimacy to the overall vaccination campaigns that are going on. And actually it's seen that this may be a way of governments, especially in the US, being able to mandate the fact that people need to have COVID vaccinations in order to be able to go to key places such as the office and work. And this allows them to be able to legitimize this. Obviously, there's a lot of people that are on different sides of this argument on whether people should be vaccinated or not. And I'm not going to take a side on that. But what I am saying is that this FDA approval is likely to be seen as a very good thing in the markets. Generally, overall for the week, it was actually a strong week of solid gains. However, on Thursday, there was a little bit of a dip in the market, and that has been attributed a lot to the fact that there were casualties on Thursday in Afghanistan, in regards to, obviously, the US has removed its troops from Afghanistan, and this has allowed kind of the Taliban to take further action. And actually there were fatalities last week on Thursday, which naturally affected the overall global stock markets. On Friday, stocks continued to have a rally, and that was because on Friday there was a Federal Reserve meeting in Jackson Hole, and there had actually been a lot of anticipation around this meeting. So a lot of people thought that it may be the time that the Fed Reserve actually announced that they are going to do tapering measures. However, the meeting didn't really deviate from the norm, and the J. Powell, who is the head of the Fed, actually did a speech, and he didn't say anything that really deviated from the path that they had already said. He just went over really what was happening in the economic climate, and no exact dates have been set for tapering. And this was seen as a generally good thing overall for the markets. I think we're generally aware that tapering measures are quite likely to happen before the end of 2021 or in 2022 overall whole. When that happens, I think a lot depends on how quickly the economy recovers and takes steps after the Delta variant has started to subside a little. There was also some really good economic data that came out of the US as well. One of those was that existing home sales had actually increased by 2% last month, which shows a continual growth. We also saw new sales of new homes increase by about 1% as well. So generally solid signs overall in the housing and real estate market. We also saw pretty good employment rates again, and although they were down slightly from the previous month, that was on the back of really good results overall in June. So overall, the employment market is showing a lot of robustness. There was also some really good data in terms of the GDP, and it actually showed that there had been GDP growth of about 6.8% in the US. Really good signs that the economy is starting to go from strength to strength. Last week, we also saw some really good results overall for some of the major European stocks and for the indices. And I think a major reason for that is the momentum that is being built in terms of the vaccination drive overall in Europe and also in the UK. So they're making really good strides. And I think a lot of the hospitalizations and the death rates are starting to go down. Of course, there are still quite a lot of cases in these countries, but I think the key metrics that people are looking at now that most people are vaccinated is these hospitalizations and is these fatality rates. It was also discussed that in the UK that they plan to start to administer booster shots for those in the most vulnerable category, and those will start to be rolled out, I believe, in September. As you will know, a lot of those people in the vulnerable category were the first people to be vaccinated, and quite a lot of time has now passed since they were first vaccinated. So it's very important that those people start to get those booster shots, because as we know, as time passes by, the vaccinations that people have previously had start to have less efficacy. We also saw some really good data from Europe, and we saw some strong PMI readings from Europe overall, and they actually produced a PMI reading of 49.5%, which showed actually really good growth in terms of the manufacturing and also the service sector, and it shows that there's really good sentiment and the economy is very robust now in Europe. However, the UK PMI was not quite as healthy as we have seen in Europe, and the PMI reading was at about 53. And if we compare that to the previous month, which was at about 57, it clearly shows that there are a few struggles overall in the UK economy. And a lot of this has to do with a labour shortage in the UK. And I've talked about this previously before, but a lot of this has to do with the UK government app, which has forced a lot of people into isolation if they have been in contact with people that happen to have COVID-19 and they have had to isolate. We've also seen an increased pressure overall on wages because of these labour shortages. And I think overall these have had an effect on the UK market and the economy. We also saw really good results in our portfolio last week for Europe and for the UK in general. So last week we had good gains in some of our stocks, such as 𝗓𝗪𝗶𝘀, which is a home builder, as well as Compass, a catering company that's within our portfolio. And Bunzl did quite well last week, as well as plus 500 as well. So overall, good results for our European and UK stocks. Over to China now, and overall, Chinese stocks actually rallied really well last week and showed some really good signs of recovery. And some of our stocks did really well as well, such as JD.com, which was very good bright spot from the technology sector, as well as some of our non-technology stocks, such as the Fosun Group, which is a very diversified conglomerate group in China, as well as Wynn Macau, which is a casino group in Macau, and also really strong gains as well last week from 𝘎𝗪𝙗𝗫, which is our Chinese stock, which actually focuses on a chain of restaurants, hot pot restaurants in China and abroad. And that actually rebounded really well last week as well. Over the last couple of months, as you know, there has been a lot of increased scrutiny on technology companies in China. And also China have been looking to put in new regulations which help to control how the technology companies operate on a day-to-day basis. However, some of that pressure seems to have been a little bit relieved on technology companies, and China has spread its focus elsewhere. As we know, the education sector has had a lot of scrutiny over the last few weeks or so, and China just this week have put a little bit more scrutiny overall on entertainment companies. And as we know, the overall mantra of China at the moment is what they're calling common prosperity. And they are now focusing a bit more on the entertainment industry because they see the entertainment industry as an area of excess. And they want to try and control that as well. So that is obviously something to keep an eye on. Early last week as well, the People's Bank of China also met with leading financial institutions around China and to talk about overall about the credit markets. And actually this is a very good sign, because in 2018 and 2019, where they held very similar meetings, what happened shortly after that was that more credit was actually released overall into the economy. And this could be a sign that they could start to begin to put in easing measures again in China, which could help to stem some of the growth issues that they've had in China and pump more money overall into the economy. So this could be a good sign overall for Chinese stocks. Last week as well, the China Securities Regulatory Commission also decided that they were going to aid the efforts of their US counterparts in order to make sure that Chinese companies that list in the US are following certain criteria, and also allows them to be able to release information. So previously, this has been going on for a couple of years, these discussions, and China was very reluctant for these Chinese companies to actually release information on the grounds of national security. So it seems that they are starting to play ball now with their US counterparts, and they are willing to for some of that information to be able to be released. And hopefully in the future, this should lead to more transparent listings for Chinese companies in the US. On the COVID-19 front, China has also started to see a big reduction in the number of COVID infections and Delta variant cases, and it's actually gone down to single digits. So this is a general good sign for the recovery of the economy overall as a whole. And we actually saw in Nanjing, which was the main epicenter, or close to the main epicenter of the Delta variant outbreak over the last couple of months. They actually previously closed their airport on concerns of the COVID spreading further. However, just this week, they have reopened their airport again, which is a good sign that they're expecting that the infection rates are going to reduce further. So over now to the top 3 performing stocks of last week. And as I alluded to earlier, in number 1 is JD.com, and that grew over 20% last week. And they were a real beneficiary of the overall rebound and recovery in Chinese stocks last week. The second best performing stock of last week was a company called Magnite, which grew over 19%. And Magnite is a sell-side advertising company based in the US. And although a couple of months ago, they experienced a reduction overall in the stock price, over the last couple of weeks, is actually rallied really well. And actually over the last couple of months, I've actually been adding to this position as it went down. So it's really nice to see a recovery, and it's a stock that I'm really bullish on for the rest of 2021. And I think it will do really well in 2022 as well. The third best performing stock in our portfolio is a company called SailPoint Technologies. And they also did really well in my portfolio last week and actually gained over 13%. So as we move over to crypto now, and crypto has generally had a very exciting August so far. And Bitcoin last week on Monday actually hit a critical milestone at $50,000. And this is the first time that it's reached $50,000 since I think very early in June. So overall, very good for bullish sentiment. However, towards the end of the week, we saw a bit of a reduction overall in the Bitcoin price, but it has since again rallied quite well over the weekend, and now we're sitting at about 48,500 at the time of this video. So overall, the signs are looking very good for Bitcoin. I think it's very key that we take out that $50,000 mark, for over 24 hours. And I think after that, I think we can make a really good push towards all-time highs again within the next month or two. So Bitcoin overall, I'm really bullish on, and it makes up a key part of our portfolio and a core position. Last week, we also saw the continuation of NFT Mania, and what NFTs are non-fungible tokens, and these are being used a lot in the art world for people to own digital versions and exclusive versions of particular artwork and other collectible items. So there's been a lot of mania over the last couple of weeks with regard to some of the NFT collections, such as CryptoPunks, where we're seeing these NFTs change hands for millions of dollars. And last week it was actually announced that Visa had actually bought the very first CryptoPunk NFT, and they actually stated that their plans were to buy more NFTs in the future. So again, this shows a lot of legitimacy towards these NFTs, and again, it's very good for some of these protocols such as Ethereum and other protocols which actually have these NFTs on them. So it's also announced last week by Jack Dorsey at Square that he was going to look to create a decentralized exchange for Bitcoin. And Jack Dorsey is a very strong advocate overall for Bitcoin And this comes on the back of many announcements that he has made with regard to Bitcoin over the last couple of months. And he also mentioned recently, I think it was just a few months ago, where he mentioned that he wanted to implement a Bitcoin payment infrastructure into Twitter as a whole, and is also setting up a DeFi department within Square. Overall, extremely bullish about where I see Bitcoin and crypto going over the next few months and towards the end of 2021. Overall, the sentiment is extremely positive at the moment, and all the on-chain metrics are actually pointing to an increased Bitcoin and crypto prices overall over the next couple of months. And all the on-chain metrics are extremely bullish and actually show there is growing health overall in the crypto ecosystem. So I'm expecting before the end of the year, I think Bitcoin will actually go over $100,000, and we're going to take out those all-time highs within the next couple of months. However, as you will know, part of my crypto strategy is to make sure that as we hit all-time highs and as the crypto market capitalization continues to increase, that I take profits off the table from some of our core positions and diversify into other areas. This doesn't matter how bullish you are on a particular industry or segment or coin, it's very important to do that in order to manage risk. And I've actually done that a bit this week, where I've actually trimmed some of our Cardano position as it reached all-time highs. And although I have left a core position for us, which I think it's going to continue to run further, I thought it was important to take some profit, stay disciplined. I've also been doing some short-term crypto trades, which I think complement our overall core strategy of longer-term positions, which benefit from the overall rise of crypto as a whole. But these short-term positions allow us to be able to make some additional profits, but also allows us to be able to manage our risk and make sure that we're not overexposed for a significant amount of time. And I closed some of these positions last week, and the aim is to do this very regularly during volatile conditions, which is very good for short-term trading, but to book in very small amounts of profit, but regularly. And I think that this strategy is doing really well and is complementing overall our core strategy. Also wanted to keep you updated because a couple of weeks ago, I mentioned in my last video that I had added a new position to a company called SoFi, and after receiving lots of feedback from my bees community, and they stated to me that the SoFi position had not shown up in the copy portfolio overall. And I communicated with eToro, and they actually stated to me that companies that had previously been SPACs were not able to be copied by copy traders. And so what I have done is I've actually closed these positions at net neutral. So it's not going to affect anyone's portfolios, and there shouldn't be any desync issues moving forward. So I think I have solved that issue overall. I've also added a new stock to our portfolio this week called Nomad Foods. And Nomad Foods is the largest European manufacturer of frozen foods. And they have some very strong brands in their portfolio, such as 𝗏𝗏𝘅, which I think everybody will know about. This is a company that I'm extremely bullish on. They're very good at acquiring and managing new brands overall into the portfolio, and they are building up a strong geographical footprint worldwide. So I expect to see a lot of growth. Thanks very much for listening to this video, guys. And as usual, if you have any questions, then please don't hesitate to ask me. I'm always happy to answer any questions that you may have. And don't forget to recommend me to your friends, to your family, and anyone that might be interested overall in investing. Thank you very much and have a great week ahead.